is it actually possible to retire at 40? And if so, what are the right investments and savings that you should be having to reach that stage? Hello everyone, I'm Aarti Nagaraj, editor of Gulf Business, and a very warm welcome to today's session hosted in collaboration with Century Financial. Now, many of you would have heard about the FIRE movement, which has become very popular in many parts of the world. What FIRE stands for is Financial Independence Retire Early. And what the movement does is that it encourages people, young people, to accumulate huge savings by living frugally, and then use that money to retire by the time they're 40, and in some cases even earlier than that. We are now in a year which has been financially very difficult for a lot of people. But on the other hand, because of travel restrictions, because of lockdown, a lot of people have also managed to save money which they would have otherwise spent. On the other hand, you also have a growth in investment options, plethora of options, in fact, in the market now. You have things like cryptocurrency, Bitcoin. We saw it reach $60,000 this month. Lot of other avenues as well. So improbable as it almost sounds to many of us, is it actually possible to retire at 40? And if so, what are the right investments and savings that you should be having to reach that stage? It's a really, really interesting subject, and we have an interesting person to discuss it with us today. Very, very pleased to have you here with us today, Vijay Valecha. He is the Chief Investment Officer at Century Financial. Thank you so much for joining us today, Vijay.
Thank you so much, Aarti, for having me here.
I'm really excited about this topic. I mean, retiring at 40, it almost sounds improbable, but is it actually possible?
The idea is it's definitely possible, and not just probable, it is definitely doable. There are just certain do's and don'ts, like for anything in life that you want to achieve, there are do's and don'ts. I want to retire at 40, I have to do X number of things to get there. I need to lose 20 kgs, I need to stop, I need to control my diet, and I need to start walking. I have not been able to do that because that for me is more improbable. But retiring at 40, I feel is a dream which I can definitely achieve.
So you have your personal example, which is amazing. Tell us about it and how you've gone about this process. When did you start? What are you looking at? Take us through the whole journey.
The whole idea is, if you want to actually do retire at 40 or 45 or whichever age you decide to, the important things to note are that you need to start investing at least 10 to 12 years before that. You need to start saving at least 15 years before that. So for me, I started investing at the age of 25. But yes, I feel anybody who starts actually investing at the age of 30 also can think of a retirement at 40. There are just basic do's and don'ts which a person really needs to follow to be able to do that.
Take us through the do's and don'ts.
So the basic do's and don'ts. The first and the most important one: never ever expand your lifestyle too much. So, of course, being in Dubai, it's the easiest thing to do is people, getting to expand their lifestyles, getting to spend much more than they actually start earning. And that's a definite reason. Again, I'm not saying that people should just postpone their holidays, postpone all joy just for the aim of retiring at 40. The idea is to just have a smaller budget for each one of those, to be a little more planned for all of those processes. At the same time, you don't really require a huge amount of capital to be retiring at 40. You require just enough capital. So, as an example, what I call it as a 5 to 15 rule. A 5 to 15 rule basically means that if you actually are spending X amount right now, so if you, let's say that your current expenditure is $5,000 a month, and you can get a very decent lifestyle in the UAE with that. The idea is you need to make sure that you have to make or actually get returns of $5,000 fixed from your investments going forward after you retire. And the idea is it's not very difficult, because people think $5,000 to earn is a very, very complicated process. It really is not. So if you actually have to make $5,000 a month, which is $60,000 roughly a year, you actually, let's say, have to invest somewhere around $1.2 million overall. So if you actually have investments or savings of $1 million plus at the age of 40, it definitely is a possibility to retire. And given the number of dollar millionaires in this country, it's more than a possibility.
So uh, you make it sound very easy almost, but is it genuinely that easy? And again, to make those right investments, how crucial is that to ensure your stability?
The idea of investments as compared to your returns is a very, very simple graph that a person should follow. As a person's age is going higher, the risk appetite of investments has to go lower. So if you start investing at the age of 30 and you're actually looking for a return of 10 to 12% per annum, it's perfectly justified. You have to look for investments which can make those 10, 12%. As your age goes in the 35 to 40 bracket, you have to ensure that you don't look for returns more than 5 to 6% annually. The main reason for actually controlling that is because you cannot take that much risk. So whenever you're actually putting in a capital of X amount and you're looking for returns of 5 to 6% per annum, you know that your risk also cannot be more than 5 to 6% per annum. You have to have a bond portfolio, a real estate portfolio, and an equity portfolio all together. And honestly, people say that it's very difficult to diversify into so many things with $1 million, but it's definitely doable.
So what has been the biggest challenge for you? You are on this journey yourself. So what are the biggest challenges that you've been able to identify?
The biggest challenge I would say is the YOLO movement. I too feel that if I have more money than my friends in the bank because I've been investing for a much longer time, and if my friend does buy a Range Rover, I also feel like buying one. There's no doubt about it. Although I feel my Pajero is a good car and it does quite well, so there's no reason for that. But yes, the YOLO is, I think, the most difficult thing. I don't compromise on my holidays or my vacations because I prefer. The idea is just about prioritizing what you really prefer and what you don't.
Um, we were discussing in the intro. I spoke about Bitcoin as well. So things like cryptocurrency, would they have a place in a portfolio like this?
So I feel anyone, like I said, as your age goes higher, your risk appetite should reduce. So anybody who actually has a risk appetite does and should invest in cryptocurrencies. The idea is it legal? Probably not. Will it ever get legal? Probably not. Is it ever going to be regulated? Most likely not. If if we actually believe that it's going to change the future of banking and finance, definitely not. But what cryptocurrencies have done is they have taught banking how to get in a process much faster and much more efficient. So it has definitely transformed banking. It definitely cannot take over banking. So when it comes to investments, should you invest in a cryptocurrency? I feel a small percentage should be given to cryptocurrencies because there is a possibility that it becomes a new asset class. People who actually call it that it is probably the next gold, it's not probably the next gold. In fact, I would say it's definitely not the next gold. It's not going to replace gold. But nonetheless, even if it's not going to replace gold, it is still a good investment because the returns are real.
What
But
about gold?
but at the
Sorry.
same time, a person should always have a very, very small percentage of their portfolio. So anybody investing in cryptocurrencies, I would highly recommend not more than 1% of your total capital invested.
1% only. Okay.
Absolutely. But the returns actually outweigh all of it.
Yeah, we were actually calculating this in office yesterday that if you invested $8 in Bitcoin in 2010, when it got 60,000, you would have like 6 million. That's a
Absolutely.
huge
Absolutely.
change. Um, you brought up gold. So going from crypto to the other end of traditional investment, does gold still have that allure among young investors?
Absolutely. I think gold is here to stay for the ages. I don't think generations can change gold. In fact, the entire cryptocurrency space has been bought about pretty much on the basis of gold. So, gold has been the only resource that we know of which is in very, very limited supply. I mean, you can actually put the entire world's gold into just a small 1,000 square feet apartment. That is the amount of gold that is there in the world. So, the limited supply is what creates value of gold. That's what Bitcoin also has tried to replicate, that it has limited number of coins that actually will be released out in the market, which is what creates value. So gold is here for the generations. Gold is not going anywhere. Gold will have slower growth, of course, but will have steady growth over the years, decades, and probably centuries to come as well.
Um, I asked you about your challenges personally, but looking at the younger generation of investors, when they have so many options in the market and when they have goals, um, what are the other challenges that they face? YOLO is one of them. I'm sure a lot of young investors have a similar outlook on that. But what are the other challenges? Is it access? Is it awareness? What are the different ones?
I think there are two major challenges. One is awareness in the market, that people don't really understand that where to invest and how to invest. And people obviously most I wouldn't say that most youngsters, I think everybody, including myself, I did my engineering because my friends were doing engineering. So people just get carried away with what their friends are doing, and it's probably the worst thing to do. It's always better to analyze things on yourself rather than just invest or do things because somebody else is doing them. So awareness is definitely a problem. Another major problem that people do face is that people don't understand risk. So understanding risk is the most important thing. While you look for 1,000% returns, you have to understand that it actually contains a risk of losing 100% of your capital as well. So people who actually think that returns can be made very easily should really understand that returns are made in the market, but at the same time, exorbitant returns don't remain forever. You can have decent returns forever. You can have exorbitant returns for one-off, but they cannot keep coming back. I mean, windfall just comes once, or lightning strikes just once. We cannot keep trying to replicate that same thing, and that is the major challenge that everyone faces in the market.
Um, Based on what you said, one thing that was in the headlines all over was the GameStop saga, in fact, which got a lot of young people hooked onto it as well. So, short selling, what was your perspective about the whole thing? Do we expect situations like that to come up again?
Absolutely. I think financial field by itself is quite a young field. I think the financial markets are probably one of the youngest major fields to be there. I mean, industrialization, factory, supply chain management, these have been on for a much longer time. So I feel the financial industry is new and pretty much controlled. What a GameStop kind of a scenario does is it shows that the power actually can lie with the retail market, and the retail market participation over time across the world is just increasing. And GameStop is probably just an example. It might be a bubble one off, but the idea is it is showing that the retail market participation is increasing and definitely will move the markets in the future.
It did catch a lot of young investors unaware, though. We had a lot of unpleasant incidents after that too. So, coming back to your point on awareness and lack of understanding of risk, how do you then? I don't know. Is regulation a right term? How do you ensure that that kind of a situation doesn't repeat?
I think regulation is definitely an important thing, because the any markets which are not well regulated are always prone to problems. Regulations are improving on a daily basis, but at the same time, regulations take time to actually come in. Something like a GameStop scenario, which actually has caused a lot of incidents, by the time the laws actually are implemented, will take a longer time. The better thing to do is to have financial awareness into schools, into universities. That will be a much more easier step to actually get in awareness at a much earlier age. And of course, regulations have and always have done their job and will continue doing their job, and trying the best of their ability to make sure that people don't get into a misrepresentative situation.
For younger investors now, do you think the crisis has changed the way they perceive investments and savings as well, in any way significantly?
Absolutely, I feel the biggest thing that has happened in this entire pandemic has that it has brought interest rates down to zero. And most importantly, I think it's going to remain this way for at least 3 or 4 years. I mean, the Fed is very clear. So what that does is that it actually teaches people that investments are required, because you cannot be there is inflation is real. So even though we have a smaller amount of inflation because housing prices are going down in this country, and we are seeing that inflation across over the world is not really picking up, but inflation is there, and real inflation is actually much higher than the CPI data reports. So real inflation is there, and people really need to grow their capital. So uh, saving in a bank, just keeping money idle, is never going to be a solution going forward. Investments are a must, and that's why I think people have to understand that people have to go for safer investments, not the riskier ones. The market really has all kinds of things where it comes to investments. It's very difficult to not get lured by the higher risk investments. But I think that's where the control comes in. That's really required for anybody to get knowledge and get themselves attuned to the markets before really investing a high sum of capital.
What and I love asking this question, though I know there is no right answer. But what is a perfect portfolio in a sense? Would you say at this point in time?
At this point in time, I feel that the best thing to do is diversify yourself, not just through asset classes, but also through countries, also through investment companies, also through banks. So I don't believe in having one bank account. I actually think that any bank can actually be bankrupt, so have multiple bank accounts. I believe that even the regulated brokers like ourselves, which are very good and very reputed in the market, I would still not tell anybody to invest all the capital with us. It's always best to diversify that as well. Even if I'm a good financial advisor, there are many more who are probably better than me, and each financial advisor has a good run. So everybody should. So the idea is diversify and just make the best of everybody's run rather than just focus on one person. And of course, diversify into different asset classes, be in gold, be in equities, definitely be in bonds. Real estate as a field is probably a very, very dull field right now because people are not really understanding that real estate is an asset class. But it's something which is going to pick up very soon, and especially in this part of the world. I think the government is taking excellent steps in getting tokenization done, where we can have fractional ownership of real estate. We ourselves are getting in that space because we feel that's definitely the future. And so getting into different investments, diversifying yourself is by far the smartest approach to do.
And when it comes to geographies, where are the areas you're bullish about right now?
So I'm really bullish on the emerging markets. I still think Asia has a lot more growth potential. I think when it comes to this entire bull market that has started from 2011, it's been predominantly a tech bull run. And still, the major countries of technology, which is India, China, and Germany, have not done well. So far, this entire tech bull run has been only a US based tech bull run. But I think India, China, and German tech companies are going to catch up very soon. So I'm really bullish on these three countries. I think investing in Asia overall, very bullish on Vietnam as well, very bullish on Korea, South Korea, of course, as well. So yeah, I feel the Asian economy is definitely a thing to look at. At the same time, of course, I would tell anybody that at least 60% of your capital has to be with the world's biggest economy. So major investments have to be with the US, but not 100%. It's always good to diversify, and Asia is, I think, the better place to diversify to.
So you would say 60% still in the US, is it roughly?
Yes, absolutely.
Wow. Okay, that's interesting. Um, you are somebody who's young, who has the goal to retire early, but you also have the advantage of being in an industry that supports it. So for somebody who's not in that industry and who uh, wants to pursue something like this, what would you say would be like, okay, let's say I'm 25 and I want to start. What is the process? How do I go about it? What would you say to them?
Well, the basic process starts is a realization that I want to invest my money and I want to retire at a certain age, whatever the number might be. The in any goal is basically achieved when you actually set a goal that I have to reach this goal. So of course, goal setting is by far the most important thing, and then secondly is to find a financial advisor who actually will help you get there. So have a financial advisor, diversify your wealth, and just keep going about it. Never ever consider what is the final goal. So if I'm playing cricket and I have a target of 350 to chase, I definitely won't look at scoring 350 on the first over. I definitely will say if I need to get 350 runs in 50 overs, that means I just need to get 7 runs an over. I have to get 7 runs this over is all I have to look at. So just understand the whole idea of compounding, how compounding investment actually keeps growing your wealth. Investing early, but realizing that if I have to make only 8% this month, so I have to focus on 8%, not focus on the X number of $1 million I need to get to for my retirement. Just keep focusing on a year to year basis, and the goal actually will be there.
Perfect. Um, Another area which has caught interest, especially again among younger investors, is our robo investors, our robo advisors. So, what is your perspective on that? Are they set to kind of not, I wouldn't use the word takeover because, yes, we all know that's not happening, but what kind of a role you expect tech to play within the wealth management space?
I feel in the wealth management space, you have to be absolutely dynamic, and there are always outliers, and outliers are always there because they have taken certain risks and certain chances which others have not. I feel that no matter how good, let's say if it's an ARC investments or any other, the idea is to actually get into that space, even if not early, even if you're later at the stage, it's good to follow the trend because you should never ever try to oppose the markets. If something is on a momentum, it's always good to get along with it in the momentum. So again, but the idea is always never to get in 100% of your capital onto that one kind of investment kind of strategy. Always invest in different strategies. This is one strategy, get into it for sure, but it's not going to be all of your wealth. So there are a lot of investors who are doing really well. SPACs have done really well as well last year. So all those investments are good to get in, but with small investment chunks. There's going to be a change in the markets where it comes to actually tokenization of even private equity wealth. So a lot of companies which will really start coming in from a really small seed stage and can probably become the next Apple or the next Tesla. Those companies can be started to invest with a very small capital to start with. So everybody who has wants diversification is being bought in. As the retail space increases, people who are getting the retail space also are increasing.
So it's becoming a more fragmented market also, right? But that
Absolutely.
makes it that much more confusing almost to understand what's going on.
It does, it does. Options are always a bad thing to have, but they're the necessary evil to have. If I eat the same thing every day, I'll definitely get bored. If I have options, I might get confused, but confusion is a better problem to have.
Fair enough. Um, we discussed a lot of do's for young investors. What are the don'ts that you would specifically have also inspired by your journey, but also in general, what would you say are the don'ts?
Well, the major don't is never to get into a extremely high spending lifestyle because it becomes very difficult after 40 or 45 if you want to actually do retire, and to actually maintain that lifestyle is a very difficult task. And what happens is that nobody really wants to reduce a lifestyle. It's very easy to increase your lifestyle, it's very difficult to reduce it. So a definite don't is to not overspend. uh, the economy can do really well, the economy can do really badly, but a person should always know their limitations. Another don't is never ever get into any kind of an investment strategy that makes you more than or double digit or triple digit returns annually. So any kind of investment strategy that makes you 8% a month or 10% a month is too good to be true, and anything which is too good to be true is not true.
Fair enough. I think that is a key one because you see a lot of people advertising double digit, triple digits as well. I mean, in numbers. So then you kind of get sucked into it very easily, right?
Yeah.
Looking ahead, what are the main trends that you see in this region from an investment perspective?
Like I said, I think UAE is by far one of the most progressive economies in the world. I mean, the vision that is there for 2040 is absolutely remarkably genius. There's no doubt about it. It is a vision which is made, and as far as see, I'm a person who's born and brought up in Dubai. I have seen every vision that has been set, whether it's a 5 year vision, there was a 1990 vision, there was a 2001 vision, there was a 2020 vision. I have seen this country actually achieve all the visions that they have set out to, and I have no doubt in my mind that 2040 vision will also be achieved. And that's being said, the biggest thing that they're focusing on is creating employment. creating industries, and hence making the economy more and more sustainable without oil as a resource as well. So what we realize is that the economy here will continue to expand, and it is a very, very clear indicator that real estate is one thing that we should be looking at in this part of the world. When it comes to investments, real estate is the easiest and the best investment. When it comes to any city which is as big or as metropolitan as Dubai is probably, in valuation terms, in real estate valuation terms, the cheapest across the whole globe, and definitely one of the easiest cities to do business in the world. Ease of doing business, convenience of living, amazing lifestyle. There is no reason why real estate valuations have to be so low in this part of the world. So real estate is at a value level to get into right now. If somebody does not want to actually buy into or put in a big chunk of money, even the fractionization has come in where people can invest small amounts of capital and have a portfolio of investments also, rather than just holding one asset and then hoping for it to go on rent. You can just fractionize it and hold 20 real estate properties, out of which you will expect at least 15 will definitely go on rent and give you the dividend. At the same time, in this part of the world, I think the regulators are making a very, very good progress when it comes to creating different structures to make sure that the liquidity in the market goes up. As the liquidity in the market goes up, we will definitely see a lot more IPOs coming in, and we'll see the financial space will continuously grow in this part of the world. The regulations are getting stronger, better, more transparent than ever before, and better than most places in the world. So the financial sector will definitely grow in this part of the world. Besides those, I think the government is really helping industrialization also. And like, we actually do believe sand will be the new gold. Investing in sand is definitely a thing, because we do realize that the world is made of microchips, and microchips are made of silicon, which is sand. So sand will be the new gold. So investing in sand itself, by in this part of the world, is a definite thing to do.
Does that exist already? Can you invest in sand?
Not yet. There will be a person who will be smarter than me who will definitely create it.
Very interesting. And lastly, we have to ask this question: what are you going to do when you retire at 40? So
there is no plan as of now, but the idea is very clear. It's that anybody obviously who's going to retire will not want to just retire on the basis of do nothing. The idea would be to not be in a corporate field, but to do something which is more of passion projects than anything else. Trying to just help things, help people. That should be I think the aim for anybody who's trying to have an early retirement.
So you're confident you can reach your goal?
I'm confident I will reach my goal. I'm not really confident if I will have the motivation to retire at that time.
Fair enough. Fair enough. Thanks so much, Vijay. I think it's still quite difficult for me to process, to be honest. Like, that's a very young age to retire. I would say a lot of people, in fact, just start saving. Many people start saving at that point. But it's really interesting how, the big do's and big don'ts. And I think, like you said, the spending part of it makes a huge difference. So yeah, we look forward to listening more from you about your journey as well. And with that, we come to the conclusion of today's session. Big thank you once again, Vijay. We hope all of you found it beneficial. Do let us know all your feedback and comments.
Thanks a lot, Aarti.